Episode 2 of the Roadmap series is officially here, and this time it's about trade management. Honestly, one of the most important things, and I really mean this because it was really something that I struggled with and that kept me unprofitable for a really long time in the beginning. And I will tell you this the correct way. Like, just watch this video. No other video will explain this as simple and clearly and correctly as this video. Getting right into it. The first one is stop loss. This is in order of like what things you should do first. But understand this, the only thing related to money that you should do when you're in a trade is how much you risk. So when they say like don't care about how much money, obviously you need to see how much to risk properly. So there's two things for this. Number one, you have to have a set risk. Like you have to know how much you're risking. That is the first thing. And then the second thing is your stop loss has to be at a correct point. Stop losses go under two different areas. Number one, stop losses go under protected lows. If a low is not protected, then you are just exit liquidity for the market makers to come take you out and continue in your direction. So a better example of a stop loss would be something like this. And then when you enter here, your stop loss is down there. So the first thing is under lows or above highs. The second area where your stop loss can lie will be under or above fair value gaps. Here we have a bearish example, and some people could put their stop loss here if they entered here. If you want to give it more room, you have the ability to place it above this fair value gap here. This gives it room so that even if price comes out, sweeps out this high again, it can still tap into the fair value gap, still respect it, and then continue going lower. And then if you have an even bigger like fair value gap, like a 5-minute gap or something, then that gives your trade a lot of room to play out. So your stop loss honestly is probably one of the most important things of the trade because it determines your risk, it determines if you win or lose a trade, and it can determine also how much you make because it is the only factor that determines your risk to reward. It's the stop loss. You might move your TPs and have partials, but you won't ever move the stop loss, or at least you shouldn't, or have multiple stop losses. It has to be a point where your trade idea gets invalidated. If you enter, for example, because of an SMT, then your stop loss should go at this high or this high, not a random high above. Or it doesn't even need to go on if there's a fair value gap here above this fair value gap. The next thing is break even. This refers to like when you should move your stop loss to break even while you're in a trade. If you're in a trade and there is a high, let's say for example, an internal high that price has to hit first before hitting your full take profit, a good point to move your stop loss to break even is at this internal high. The reason you do this is not just to preserve capital, but it's also because these are points where price could possibly reverse. Yes, price isn't probably likely to reverse off this because like let's say it's a 5-minute high and your take profit is a 1-hour high, and it's most likely just to continue to run up there. But you have to always protect your position, and this is why you put your stop loss at break even, to ensure that there's no reason for price to reverse, and if it does reverse, you don't lose extra money. The second point I have to this, which is pretty similar, is if you take a partial profit off, you should definitely move your stop loss to break even because that is very well a point to reverse. All right, on to the third thing, take profit. The take profit point should simply be an external high or low. This is just liquidity. It could be equal highs, it could be London highs, Asian highs, 1-hour highs, 4-hour highs, 1-day highs, whatever you want it to be, all-time highs, right? Or rarely, it could also be like a 1-hour fair value gap or a 5-minute fair value gap or even a 4-hour equilibrium. Like it could be anything. It could be an order. It could be any one of your confluences, but most of the times it's going to be liquidity because that is where price tends to draw towards most of the times. Again, you guys should already know this by now. You guys enter trade, whatever, and your take profit is at a liquidity point. Pretty simple stuff. At number 4, we have partial take profits. This is literally just if you're in a trade and you're aiming for like above a 2-to-1 RR and you don't want to just do one full take profit up there. You want to secure some profits along the way. You just do multiple take profits. Now, I would watch out with this because this is something that can rob you of a lot of money. Only do partial take profits if the first profit is like a 2-to-1. So the second partial has to be above a 2-to-1. Do not do like a 1-to-1 partial take profit and then a 1-to-1.2 and then let's say a 1-to-2, and then because if the first two hit, you will make so much less money because if you're already out like let's say 66% of your position at a 1.2, you're not going to make much. Like you guys are obviously not like risking insane amounts of money. So like watch out with the partial TPs. This ties into the last thing that I have here on the list, which is fear versus greed. So a reason why a lot of people do and why I myself used to do a lot of partial take profits was because you're basically fearful that price won't hit your full TP, and you just want to secure some profits and make money. That's it. That's your goal. Because as you guys will notice, pretty much every problem is linked to money in trading. That's how it can be linked to money. And then greed is also another way it can be linked to money, because you're saying that you want to take, let's say, a 1 to 10. Why? Because you want to make as much money as you can. So the completely different side of the spectrum. One is you want to make a lot. The other one is you just want to make something. This is why you guys have to not put so much importance on the take profits. Because when you guys see how much money you make, you want to move it, you want to do all that stuff. And I get it, but don't do it. In the long run, you're not going to make as much money as you would. So just stick to your rules, stick to your basics. The stop loss is the most important thing. Understand when to move it to break even. Understand when to take partial take profits. Rarely. Partial take profits should be used as like extra runners, not as a point to secure profits. And then ideally, your trades with this strategy would want to be like above a 2 to 1 RR, or sometimes it can also be, a 1.5 to 1. Like it can be, remember, we have a flexible strategy. There's no set thing. I'm not telling you every single trade you have to take a 3 to 1. You can take a 1 to 1, but if you're confident and you know what you're doing and it works out, do it. Please do not be fearful or greedy. If you guys get in a trade, that means that you are confident that that position will hit. So there should be no need to be fearful or greedy. Get in a trade, just look at your screen, and either it hits take profit or stop loss. It is what it is either way. Now, I have one extra tip to tell you guys if you stayed till the end of the video. When you guys do your TPs, I would recommend, let's say you have your TP on a high, I would recommend moving it maximum 3 ticks higher. When have you guys seen price hit your TP exactly and then reverse and like go all the way back down? Like it wouldn't do that, because then it would just create equal highs, which is more liquidity to get taken out. When you guys have a take profit at like liquidity or something, and you guys want like a little bit of extra profit, not out of emotions, just out of strategical thinking and logic, you can move it up 3 ticks max, because usually every time I've done that, it has worked out. So that's a good tip for you guys, but don't go any more than that. Just go 3 ticks above, just because price is not going to make it equal highs. Like it's obviously going to go through the liquidity point. So that's the video for today. If you guys liked it, feel free to like, comment, whatever you want, subscribe, all that. I'm not going to force it down your throat. You already know. So much more is to come, but I hope you guys watch this video. Please take what you're learning from these videos and implement them on the charts. All right, see you guys next time.